Hello everyone, this is Knowledge Topper, and in this video we are talking about a very important financial statement, and that is cash flow statement. I already made a video about the two other important financial statement like income statement and balance sheet. Now we are talking about cash flow statement. In this video we cover that how cash flow statement works, what is the uses of cash flow statement, and what a cash flow statement tells us about the position of a company during a given period. So we all talk about this, so let's get into this. And first of all, we would look at the definition first. Please look at the wordings. So let's start it. A cash flow statement is a financial statement that provides aggregate means overall, that provides overall data regarding all cash inflows a company receives from its ongoing operations and external investment sources. It also includes all cash outflows that pay for business activities and investment during a given period. So there are two important words that should be highlighted when explaining your cash flow statement, like all cash inflows and all cash outflows. Means, as you saw a name here about our topic, like cash flow statement, so it means it is a statement of only cash, means all cash inflows and all cash outflows, like what cash is come in our company, or you can say that how many cash inflows a company receives during a given period, or how many cash outflows a company pays for business activities and investment during a given period. So it's all about the cash going and the cash coming. So we will look at the cash flow statements to companies' ability to generate cash. So now we would like to go with the definition, and now I will show you that what is the importance and usefulness of cash flow statements. So here it is, usefulness and format of cash flow statement. So what cash flow statements provide information related to a particular entity or particular corporation. So it provides information to help assess entities' ability to generate future cash flows, like a company has the capability, a company has the ability, or a company can generate future cash flows or from their activities. The second is entities' ability to pay dividends and obligations, like if a company has good capability or good ability to generate cash flows, so the company can pay its dividend obligations. So there's no problem whatsoever for a shareholder to decide either to invest in that particular company or not. So the third is reasons for difference between net income and net cash provided used by operating activities. Like net cash is a different thing and net income is a different thing. Like it is not possible, like if a company has 50,000 net income, so it does mean that a company has 50,000 net cash. Net cash is different and net income is also different. Like in net income we are talking about the whole income statement, like it includes expenses, it includes different inventories, and each and everything that is included in net income. So if we talk about net cash, it is purely related to cash activities. So it is all about liquidity, that how a company is being able to generate cash and how a company is liquid. The fourth point tells us that during the period how much a company invests and how much a company invests their cash and in financing transactions. So how much a company invests cashes and financial transactions during the period in investing activities and financing activities. So we will all look in our next video, that is the classification of statement of cash flows. So you will know what to include in operating inflows, in operating outflows, and what to include in investing activities inflows and investing activities outflows, and what to include in financing activities inflows and financing activities outflows. So we will all look in to the classification in our next video. I would like to give you a brief overview in this video related to classification of cash flows. We will look each of them in a separate video. Like in next video we are talking about operating activities, then investing activities, and then financing activities. So what to include in operating activities, like it is related to income statement items. Okay, the second is investing activities. It includes changes in investment in long-term asset investment. I would like to talk in later part in detail. The third is financing activities, like changes in long-term liabilities and stockholders equity item. So we will discuss in detail. So this is the video for all of you. Hope you learn a lot, hope you understand about cash flows, a brief overview about cash flows. Now we would make a video related to classification of cash flows. So do watch it, and if you like our channel Knowledge Topper, subscribe our channel and like our page on Facebook. So it's time to say bye bye, and thank you so much everyone.